Choosing the right ITR form is a must for smooth processing of your ITR. Since the due date to file returns for FY 2021-22 is fast approaching, don't you think it is the correct time to know which ITR is applicable to you? Hi everyone, I am Prarthana from Clear. We have assisted more than 80,000 tax experts and 6 million tax filers. Do subscribe to support us and get a clear explanation of financial concepts. In this video, I will show you how to select the correct ITR form. The government has notified the income tax return forms for FY 2021-22. As in the past 2 years, the income tax return forms have been kept largely unchanged. ITR forms are broadly classified into two types of taxpayer categories. ITR forms such as ITR 1, ITR 2, ITR 3 and ITR 4 apply to individuals for filing their returns, and ITR forms 5, 6, 7 are applicable for business and firms. Starting with ITR 1, this is the simplest ITR form of all. Like last year, ITR 1 can be filed by individuals having total income up to Rs 50 lakh.
If your source of income includes salaries, income from one house property, means rental income from one house property, and other sources such as interest income, dividend, family pension, etc., and agricultural income up to Rs 5,000.
So you can see that businesses, professionals, NRIs and those earning capital gains cannot file ITR 1.
Moreover, an individual will also not be eligible to file ITR 1 if he or she is a director of a company or has invested in unlisted equity shares, or income tax on ESOPs is deferred, or where TDS has been deducted under Section 194N of the Income Tax Act 1961. TDS under Section 194N is deducted on cash withdrawal from a bank account exceeding a specified limit.
ITR 2 applies to individuals and HUF. In short, ITR 2 covers all types of income covered in ITR 1 and where the total income exceeds Rs 50 lakh. Apart from this, one can also file ITR 2 for income from capital gains, income from more than one house property, foreign income or foreign assets, agricultural income if more than Rs 5,000. Also, it is applicable if you hold dictatorship in a company and invest in an unlisted company during the year. However, one thing needs to be noted that ITR 1 can be filed by residents only, whereas ITR 2 can be filed by residents and non-residents.
The ITR 2 form has been modified to capture additional information with respect to stock option benefits provided by eligible startups. The event of taxation is deferred to the point of sale. A separate schedule has now been introduced to capture details of such deferment. Interest accrued on PF contributions beyond specified limits is taxable. The tax return forms seek to capture details of such interest accrued as well.
Before proceeding further, let me tell you that now we will know which ITR to file for individuals earning business or profession. Individuals earning income from business or profession should file the income tax return in ITR 3. ITR 3 applies to individuals and HUF. The partner receiving interest, remuneration, etc. from the partnership firm should show such income in ITR 3. Now, many are confused. What if they do a part-time job and earn income from freelancing or businesses? The answer is ITR 3. Yes, if you are an individual and you are doing any kind of business or profession, you need to file ITR 3, and it has a provision to show other incomes such as salary, pension, other sources of income, capital gains, etc. Now, ITR 4 form is an income tax return form for those taxpayers who have opted for the Presumptive Income Scheme as per Section 44AD, Section 44ADA and Section 44AE, and whose income is not more than Rs 50 lakh. In case you are offering your business or professional income on a presumptive basis but your total income exceeds 50 lakhs, you have to use ITR 3 only.
ITR 4 is also not applicable in these cases wherein if any individuals has business income and having income from more than one housing property, or having foreign assets or earning foreign income, or if he or she is a director in a company, or if he or she holds investments in unlisted equity shares at any time during the financial year, or if he has brought any forward loss or loss to be carried forward under any head of income, or an individual HUF or partnership firm whose books of accounts should be audited under the Income Tax Act 1961.
Did you understand the difference when you have to file ITR 3 and ITR 4? If yes, then please say yes in the comment section below. ITR 5 is for person or partnership firms, LLPs, that is Limited Liability Partnership, AOP, Association of Persons, BOI, Body of Individuals, Artificial Jurisdiction Person, AJP, Estate of Deceased, Estate of Insolvent, Business Trust and Investment Fund. ITR 6 is for companies. It is not applicable to those companies who hold their income from property for religious or charitable purposes and claim exemption under Section 11. ITR 7 is applicable to every person in receipt of income derived from property held under trust or other legal obligation wholly for charitable or religious purposes or in part only for such purposes. I hope this video was helpful for you. For queries related to business and finance, you can contact our experts by clicking on the chat link provided in the description box below. Also, don't forget to subscribe to our channel for more informative videos and stay tuned for more updates. Thank you so much. Take care.